Welcome everybody to the ITESOFT webinar. This webinar is all about looking at robotic process automation, artificial intelligence, and how that applies specifically to accounts payable. My name's Alan Brown. I'm going to be taking you through this session today. A little bit of housekeeping for everybody. Firstly, everybody is going to be on mute to start with, and that's just so we don't pick up any background noise, etc., that may well disturb what we're going through at this stage. So if people, and I do expect there to be questions, so when you do have a question, on the right hand side of your screen there should be a chat log, and in that chat log, if you can put your questions in, I would personally suggest that you put them in as you have the questions come up in your head, rather than trying to remember them and wait to the end. Personally, I find that I forget, and therefore I don't get the information that I'm looking for. Put it in. I'm not going to deal with this or the questions until we get to the end. So we'll then pick them up at that stage and deal with them at that point, rather than anything else. Okay, so in terms of what we're going to look to take you through today, we're just going to put a little bit of context around what is robotic process automation, artificial intelligence, the accounts payable, side of things, rather than anything else. Then we're going to look at digital transformation, where it's come from, more importantly, where it's going, what sort of things are we talking about, and this is where we're really going to get into, what is RPA, what is AI, etc., and then looking at how that is fitting into the accounts payable, specifically finance piece around invoicing, and then one aspect that we're going to be looking at as part of this is going to be the extraction piece, which generally tends to be a fairly important part to what a lot of organizations are looking for. And then I'm going to take you through one of our clients that is using the software and has this sort of capability in place as we speak. Now they've had software for a while and upgraded, and as they've upgraded, they've then got some of that capability that's been plugged in for them. And at the end, I've got questions and answers. So this is where, via the chat log, we'll be looking to put in place the answers to some of the specific questions that you have, either on the content or that is more specific to your organization, or about the marketplace generally that we're talking about here. So if we look at the context side of things, I guess, one of the key things about this is that every organization that I speak with, they're all busy. And I would make a wild, vast assumption here that you guys are pretty busy as well. And at some stage you need to start thinking about, well, there should be an easier way of being able to deal with this. And I also suspect, and I haven't come across this very often, but most organizations don't have anyone who is looking to go out into the marketplace and look at new technology, and how can that new technology help our organization? How can this emerging technology or disruptive technology help us in specific departments like the finance area, or to do with governance, or to do with reporting, or to do with customer service, etc., etc. Now, we're obviously specifically focusing on the accounts payable side of things, but if you are busy and you don't have people who are going out to be able to do this, well, fundamentally, this means that you're having to, at some point, get and do some of that research yourselves. Now, part of the problem that's out there in the marketplace is that it can be quite intimidating, because there's a lot of noise, a lot of marketing and hype regarding certain technologies, or about the understanding of certain technologies. And, To name a few that we've got up there, we've got RPA, or robotics, artificial intelligence. What does that mean? Machine learning. Are they related? Are they not related? Are they the same? Are they not the same? And how are they different? And how does that specifically apply to accounts payable? We also have things like big data that's been around for a while, the analytics, reporting, dashboards. Again, are they the same or are they different? And how, again, will that help you to do your job better than you currently are? So we've got all this stuff that's going on in the marketplace. How is this at a basic level, very simplistically, going to help you produce a more effective, more efficient, more productive way of being able to deal with invoices, while at the same time you're still being able to report out about your suppliers, whether you're paying them on time, creating a great service for your customers, the business, so that they get the information they're looking for, and of course you pay the right people as opposed to any level of fraud that may or may not go on as well. So that's really the background to why we put this webinar in place in the first instance, because when we're out speaking to people, whether it's on the telephone, at very early stages and researching, or whether it's organizations who've already got a system and they're looking to change, they're trying to really understand, well, what does this mean and how does it apply to us? And there's a lot of misconceptions that are going on in the marketplace. So what we're going to do now is just have a little look at what some of the drivers are for this and why this transformation is coming around and what it really means in terms of who is driving it and why it's being driven. So these are, what you've now got in front of you are priorities from the Chief Financial Officers. And this was taken at the beginning of this year. It was research that was commissioned via PwC, and we can see that it is split into 3 boxes. Priority 1, Priority 2, and Priority 3. So the first box you'll see on the left-hand side of the screen under Performance Management is 31%, Priority 2, 26%, and then Priority 3, or least important, given what they were asked to respond to, is 16%. So we can look at some of these and go, well, based on that, performance management is the largest priority for CFOs, senior management, the board in organizations. And all the things that they are then looking at in priority are our development strategy, that's across the whole organization as well. Then we're also looking at this round the optimization of processes for purchase to pay, order to cash, etc. Then things like the treasury aspects around cash management. So we've got the money that we want to have to be able to pay suppliers on time, or we might want to go to them early for discounting, etc. We have risk control. This, to a certain extent, plays into performance management rounds, reporting, governance, things like that, and talent management about how do we actually just hold on to our staff who've got knowledge within the organization, and we need to be able to keep that because we can't dilute everything fundamentally into a database and into a machine to be able to do things. So these are the sort of priorities that the CFOs are looking at. And some of these relate directly into the finance department and some even more specifically into accounts payable. So, things like performance management. Are we paying our suppliers on time? Very simply. Development strategy around IT and optimization of processes. Do we have the right technology in place, if at all, to be able to do this more effectively? So we still come across a large number of organizations that are manual. We also come across a large number of organizations that have a level of digitalization in place and have a digital strategy in place. But saying that, there are lots of gaps in that. They don't have digitalization across the board for everything, and therefore everything is digital. So you might have a scanner in place, for instance. You've got a digital invoice. Let's take that as an example, but you're still keying it from image. Therefore, you've got some of the blocks in place, but you don't have all of them. We then have aspects around the risk control. There's things like duty to report that are now out and being reported on. How easy and simple is it to do that? Because that generally hits finance and accounts payable to be able to say when suppliers are being paid and to be able to put the reasons in place about why they are not being paid on time if that's the case. What we'll do now is look at some of the reasons or some of the technology reasons about where organizations are. So on the top left-hand side of the screen, we can see, we'll look at digitalization here to start with, levers that are implemented. So the light orange, best color I can give that one, almost yellow, is 2016, and then 2017 was last year. So we can see there was a small increase in digitalization around the finance processes from 2016 to 2017. Okay, that's a very small 1% increase that's gone on. So where are they going to go with that? So a lot of organizations will have some processes, workflows in place at this moment in time. A lot of organizations still don't have a lot of reporting or visualization, analytics in place. More and more organizations are looking to move to the cloud and have some sort of SaaS-based offering and capability put in place. But if we go down the other end here and we look at things like robotics, well, you know, most organizations are really doing the square root of not a lot around things like robotics, or where does blockchain, which has had a huge amount of hype last year in the press about this, is not really being used very much at all. And we'll touch on some of this later on as well. But interesting, if we start looking at where we've been on the top of this graph, down into where are they looking to go next? Well, actually, interestingly enough, the digitalization around P2P and the workflows and sign-offs and authority matrix, etc., is still pretty high, with 49% of organizations looking at having projects in place in the next 3 years. Now, I appreciate having a project in place in the next 3 years doesn't mean to say that they'll actually have it in place or that it will actually, more importantly, happen, because other things happen. What happens if you upgrade your ERP, for instance? Or what happens if you change your CRM system? What happens if you buy another company, etc.? So there can be lots of competing projects which go on at this stage. But interestingly enough, especially as we're talking about RPA and AI in here, what we do have coming into this is more and more of the analytics. And to get to analytics, you have to have, as a baseline starting point, digitalization in place to be able to have data and metrics to be able to work from. We have the robotics, which has had a huge jump going on from 9% up to 21%, and blockchain's taking off as well. So these are the focus areas that the board has, because it's being talked about. There are organizations like ourselves who are promoting this to be able to solve specific problems within the organization. So that's all great, and that's for the future. But looking at the RPA side of things and artificial intelligence, well, fantastic. But actually, in reality, how mature is it? So what we can see here is, now this is actually a Gartner wave that is a well-known wave put in place. And starting on the left-hand side of the screen, we have the visibility. Who knows about it? How many people know about it? And then on the bottom, going from left to right, we have just the timescales. So down in the bottom left-hand corner, we can have a disruptive technology that comes out that says blockchain, for instance. It's not been out for an awful long time, but it has a huge amount of awareness in the marketplace and talk and hype going on about it. And what Gartner talks about is that will carry on, and some leading organizations will take it on because they believe that they will get a unique perspective by having this technology that will help drive their business in a more profitable way, which leads to this peak of inflated expectations. And just because the capability is being talked about doesn't mean to say that it actually matches the fundamental skill set within the product. So what generally happens is you have the product comes out and it's being set up for almost a fail, and the expectations that it has internally starts to drift down into this trough of disillusionment. And then from there, it really starts to become much more of an application where over time the product has matured into something that is very usable within a departmental basis rather than at an enterprise basis. So let's take a very simple example of a technology maturity, an actual robot. Okay, we've talked about robots for years, and one of the areas that it's proved to be very, very effective is actually in the car manufacturing industry. It's also in other industries as well, where they will make printed circuit boards, for instance. But how many cars do you see out on the road nowadays that have that are poorly manufactured, that have rust on them, where it's rather shoddy workmanship that's going on? Well, because robots have been involved in the assembly of these, it's driven down cost, it's increased the quality of the product, and that now is over here on the right hand side of the screen more than anything else. And really that's what we're now going to go into, is some examples around technology and where would it sit on this technology maturity graph rather than anything else. Now, the first one that we're going to talk about is cloud, because it's been around for quite a long time. People or organizations generally tend to like it because they don't need to deal with the infrastructure. You're essentially outsourcing the hardware and anything that's required to keep your hardware up and running, including people who will go in and check, is the server running, do the logs need clearing down, do we need to have a hotfix put against this server, etc., etc. That's all outsourced. All you get really is an application which is sitting on on that infrastructure to run. So it makes it very simple, very easy. It gives you a huge amount of flexibility, and because it tends to be very much a SaaS-based type product, it means that it has a low entry cost into the marketplace. So this was a disruptive technology, crikey, even 10 years ago, almost 15 years ago. And as it's matured, and this is now on the right-hand side of that technology maturity curve, it has become much more as a pay-as-you-go mobile phone type of service that you buy, rather than necessarily a product in its own right. A simple example of that is something like Facebook or LinkedIn. We all get the same Facebook or LinkedIn application. There's a few different things that you can tinker about in terms of your settings, but it's all pretty much the same for everyone else. But one of the key things that we're able to do with the cloud, and this is now becoming, with the maturity of cloud itself, we're now able to mutualize capability on the cloud that had never ever been seen before. And there's a technology around that I'll come on to over the next few slides. So from that, it's then started to allow us to move specifically into RPA, or robotics, or robotic process automation. So first thing about that is, well, actually, they are one and all of the same. So that name that I've just, or the three names that I've just used there, are all essentially mean the same thing. And for a lot of organizations, this is where it's been applied to something that someone does or has done, that they have regularly done exactly the same thing time and time again. Hence why manufacturing has been a key area where the robotics has been used to be able to move equipment around a factory floor, for instance, or to assemble a car, as the example was that I gave earlier. It's not necessarily that they're low value, but because they all have value, but it's about moving the people to better quality and higher value jobs, because we need to increase the quality of some of the aspects around us. So one of the things, for instance, for the organizations that I deal with from an AP perspective, is how many of you would get data errors from staff entering data into, usually it's your ERP. That's where we would see this as a low value task. It has to be done, but we're getting mistakes. And by adding robotics to that type of capability, for instance, it then means these people who had been entering data, and hey, we're all human, we get things wrong occasionally, can be used to do better value, higher priority tasks that they just generally don't have time to do because they're so busy. Now, to be able to achieve robotics or RPA, you have to have digitalization at the start. It's a fundamental requirement for being able to do that. And some of the underlying other technologies that use this, that need to have digitalization for it, that are applied to it, are aspects like business process management suites. Other aspects like, business rules. So, take an easy example. We'll take invoices again. If it comes in as a PO invoice, do you want to put it down the same route as a non-PO invoice? That's a business rule. Very, simple. But for most organizations, how do you deal with that? How do you deal with integration, APIs? And there are lots of different types that are out there, from XML to basic CSV text files, etc., etc. And then we've got robotic and process automation, which takes some of that data-driven tasks and also moves that data around the organization. So some examples of that can be around emails and how do you deal with, for instance, email invoices that come into your organization, and how can you apply a level of automation to that? I know a lot of organizations, the number of invoices that get coming in by email is growing and getting higher, and actually, interestingly enough, they're still actually then having to deal with it manually. Well, that's not quite RPA then on that basis, is it? So, there are aspects around that. How can we put controls, how can we put governance in place if we don't have digitalization in place and robotics to be able to apply the business rules to that? So these are just some examples of where this is, and depending on what you're looking at from a product perspective will depend on how mature this is. So what I mean by that is some organizations have been dealing with robotics and process automation very much separately, and others have only just got on using new open source technology, for instance, to be able to create that type of capability. So understanding what is meant by your vendor and by the market and the marketing companies who are selling it or trying to sell it to you is quite important, especially to say, how does that help my business? How is this going to give me efficiency? How is this going to make my business simpler? And how will this reduce cost or increase profitability for me? Let's look at another one. We talked about at the start that we're going to explore RPA and AI. So we've just done robotics and robotic process automation. Let's look at artificial intelligence. So what do we actually mean by this? And once again, it has various different meanings which mean different things. And depending on which company you're speaking with, they may use one, many, and will probably, as I've seen in many cases, get it mixed up, talking about AI as robotics and vice versa. So neural networks, machine learning, deep learning, they are similar, but actually are quite different. So robotics, and we could take something like OCR, for instance. OCR is actually relatively basic. It's how do you take an image from a piece of paper and replicate that digitally? Great. Okay. A lot of organizations can do that. Okay. You may even receive that digitally, i.e. it's an email as a PDF. But you can't actually do anything with the data. So how can you actually then do something meaningful with that? And this is where we have neural networks, or knowledge bases is another word that's sometimes used for this, where you can extract data from that page and go invoice. Well, what does invoice mean? And what can you do with that? Because what if it's invoice with purchase order? So is that the same as just invoice? So the machine learning and deep learning side of things we're going to come on to in a minute. But some of the cases that I've just been talking about is character recognition. And we have not just the OCR side of things, but intelligent character recognition, where you're looking to move data around and move the invoice around based on that. It doesn't just have to be, so we can widen the net on this outside of finance into any other type of document. So for instance, if it comes in and it has complaint on it, can we then put it down to our complaints department automatically for them to deal with? If it comes in and it says customer service, can we move it off to our call center team to deal with, etc. And then, of course, how do we deal with and use artificial intelligence across a number of different mediums that we have? So voice, portal, the call center, and getting that information all pulled together. So let's look at machine learning in a little bit more detail. So I've just brought up a picture on the top right hand side of the screen. So what we see here, where my mouse is now, is, I would say that's a Volkswagen Beetle personally, the dark blue one, that's the input. And machine learning was, we used to have a developer or a coder, an engineer, various different names that you can give them, who would actually put that, or the details of this car or this vehicle, into a database, so that the next time this comes in, then we can recognize it and do something with it. So neural networks and machine learning are actually slightly different based on that. And then we have deep learning, where actually, if we look below, we've still got the same car, still looks like a Volkswagen Beetle to me, but what we've now done is created a network internally where the system is able to learn itself and is then able to identify that this is a car, and it might even identify specifically what the car is, because it's able to do this classification work by itself. That has a much higher level, higher quality capability within the product set that you might not get, or probably wouldn't get, in less mature products, because it takes time to be able to get this into a system, test it more importantly, and then have the correct results come out that you can then reuse on a regular basis. So interesting quote down here from one of the VPs at Gartner, where what he's suggesting is that the enterprises, and this is the large scale ones, should really be focusing on what is the objective, what are we trying to be able to achieve using these applications that can exploit a very narrow field of our AI, and leave the rest to everyone else until they get to a point where we can use that in specific fields. So we're actually back to application specific again. So instead of going out and saying we're going to buy an AI tool across the whole organization, well, that's great, but it's not driving value. What he's saying here is, if you're looking for help in your customer service area, go and get an AI tool specifically for that. If you're looking for AI within your finance team, your accounts payable team, look for something that's got that in it already, rather than anything else. One of the other areas that we talked about was the governance, the reporting, visibility, aspects that came out as part of the technology levers for the CFOs and what they're looking to be able to do there. And this is all about big data and the analytics aspects of that, and how do we understand that data? Well, to be able to do that, we need to be able to have much more data, to be able to see patterns, to be able to dig into it much deeper and much faster than we could ever do before. You might remember a number of years ago, I say a number of years ago, I think it was only 3 years ago, Microsoft used to run some adverts about their cloud, essentially their Azure platform, and how by using that, their customers were able to find cures in certain fields. I won't go into any more detail than that, but this is the type of capability that we're talking about. You're able to drill into data, you're able to follow it through until you get to a conclusion that goes, that's interesting or it's irrelevant. And we're looking at more and more of this because if we've got it digitalized, we're able to then start looking into the future about if we grow the business at the current rate of, let's say, 10% a year, what impact will that have for us? What impact would that have for you in AP? If you were growing the business by 10% a year and your customers are sending in 20% more invoices because of that? Or how can we actually then start moving more and more customers across to different channels of sending invoices in so that it's easier for us? How can we put business rules in place that we may have some small problems, but we can see how that could escalate? So this can then apply into other areas like bottlenecks. How do you identify these? Or how do you, more importantly, anticipate that they're going to happen? Might be based on holiday time. We're coming up to August when a lot of people go on holiday. And therefore, how do we understand the correlation between, is that a busy time of year for us and therefore we need more staff? Or is it quieter and therefore we're going to be okay? How do we resource correctly for that? And this has been around. This type of technology is reasonably immature still. It's gone through the peak of, or the trough of disillusionment. It's coming out the other side. You guys will probably have a lot of business intelligence tools out there, but this is not quite the same. So this is, much earlier, and business intelligence tools won't give you quite the same level of analytical information and drill down that you're looking for, and the representation or data viz, as they are wording it, that you would be looking to see. So, I mentioned blockchain earlier. Let's not forget that one because, wow, has it really hit the marketplace and had a huge amount of talk about it. So, I guess one of the key things about blockchain is it's not owned by any one organization. It's not owned by any one country. So one of the big areas that most people will know about it from is Bitcoin and therefore cryptocurrencies. And part of the reason why it's taken off so much is because it's not controlled by any one government, and therefore it has a self-regulating capability about it. Why is it so good for a lot of organizations or a lot of people? Well, the key thing about it is this line here at the bottom. It is tamper-proof. It's the traceability, the audibility around the document that you get from it. So because of the high levels of encryption that it's got, you get, let's use Bitcoin as an example, but you get the blockchain key for it, and it can't be hacked as long as it's taken off the ledger. It can't be hacked. You've got it. It has that full audit trail on it. So there are now areas where over the last 18 months that organisations are really starting to strive to use this. So, for instance, around the food aspects, and the whole supply chain, pharmaceutical organisations and the supply chain, where did all the different ingredients come from? Can we trace them all back? How secure is that, so that we know it has come from the right place? And gosh, didn't we have a food scandal a few years ago about not being able to trace the food, and it wasn't the correct type of meat that we had, going through the system. So this is a very young technology. It's quite immature in terms of where it is. It's been around for quite a while, because blockchain came out back mid 2000s, but its capability within the marketplace hasn't really taken off hugely at this moment in time. So what I would like to suggest, any questions on what we've covered there around technologies, robotics, artificial intelligence, please put them in through the chat log, and we will look to cover these when we get to the end. What we're now going to look at is, how does any of this, if at all, fit into accounts payable? And what we're going to look at first to start with is, well, why would you automate? So some of you may well have systems in place already, some may not. And for these organizations that have got something in place, I guess the top one has really been probably one of the big drivers. For some other organizations that will have it, it may well be they just wanted to have a more modern, up-to-date system that was more effective. But these generally tend to be the big ones. I need to be able to reduce my cost. I want to be able to get away from manual tasks, free up time, this sort of stuff. I want to be able to have the team work more productively. I need to have more efficiency with the team. So most organizations, it's generally accepted that they will do, if you're lucky, 50 invoices a day. Okay, that's header and footer only. So that's round about somewhere between, on average, 10 to 12,000 invoices a year that they would be able to process, and on an annualized basis. So this is why organizations are looking to move through and have something different. There's more regulatory compliance coming out, DTR for instance. Mastering your payment terms is something that generally tends to be a big one for most organizations. So what we're then going to do is, going from there, look at what the main benefits are on this slide and why would organizations want to do it. So this is looking at, what are the costs, why have we got these costs, and what we have here is a scenario where we've got here best in class, and then pretty much everyone else. So best in class would be, we've automated as much as we can using the technology that's available today. And on the other side, pretty much the opposite of that. So including internal costs, we're talking about best case possible at this moment in time, based on these figures, which was last year from one of our partner companies who did this study. We're talking about almost just under $3. But then again, it's just over $15 if you are looking at doing it manually. And there's a huge difference between that. And why? Never mind the amount of time that it takes to be able to process an invoice through the organization and have it ready to pay when you need to have it. What about the number of exceptions that you have come through? Now that could be price quantity discrepancies, GRN discrepancies, unplanned cost discrepancies, manual non-PO based invoices that you're having to deal with. Interestingly enough though, what's the difference between invoices which are going straight through the system, i.e. they're coming in electronically, or you're scanning them from a paper-based perspective, and then they're sitting in your ERP ready to pay? Well, there's a huge difference there. Almost 60% are going straight through in best in class, whereas it's less than 20%. So, that's more than double what was going on before. So there are huge differences that come into why you would want to do this and what you're going to be able to achieve from that. I'm not going to spend too much time on this. Again, any questions, please put them in through the chat log, and we will look to deal with that at the end. But what I'd like to look at now is let's break down what the building blocks are for invoice processing into big blocks that just help hopefully make it much more simpler for everyone. And really at this stage here, we've got on the left hand side of the screen two elements. First one is, how do we capture invoices coming into the organization? Don't care what type, don't care what format, how do we capture them and put them into a standard format that we can use internally? And you can see down here we've got scanning, so that's paper, email. We might have these directly imported or e-invoicing, which we'll come back to. And another aspect to this is, can you tell your suppliers what format and structure you want to have them in? Good luck with that one. Now, what we're really looking for once we've captured these documents is they can go straight through, no one touches them, hits our ERP, ready to be paid. Brilliant. That's exactly what we're looking for. And having as many of these go through that as possible. So as part of that, we need to be able to have invoices that we can extract data from, we can validate data from. So, is this an invoice document? Is it an invoice with PO? Is it a credit note? Can we match the PO details together? Can we identify who the supplier is? And then push them into the ERP because it all matches? Or what happens if we've got no goods receipt for it? So, this is, all stuff that we are looking to push into the ERP for that no-touch capability. But undoubtedly, you're going to get some of these which are going to have discrepancies. Well, we want these out on a workflow that AP don't have to deal with. So they're out in the business, bang, job done. AP have visibility of them because we've got the analytics in place. So from the time that an invoice comes in to the time that it's paid, we can see where it is. And then we have the AP dealing with the non-PO invoices that need to be coded, because that's generally what happens, sent out into the business for validation. And then depending on the type of structure you have will depend on whether they have another level of approval or whether they just go to your ERP for payment. And then we have a supplier portal capability to allow true e-invoicing at that stage. They can upload, your suppliers can upload invoices through there. They can do self-service on queries. Have you got my invoice? When's it going to be paid? Has it been paid? Payment reconciliation. Supplier statements, gosh, let them do their own work so that you don't have that cost associated to it. So there are the big building blocks that you need to be looking at, and where can robotics and where can RPA and AI be applied to each of these. So what we're going to look at now are some of the problems with some of the solutions out there. There's essentially three solutions. You've got an on-premise capability that you could purchase. There's a packaged SaaS solution. Another option is to outsource the whole thing to someone else to deal with. But I'm a software company, so it's not something that I'm going to be talking about today with yourselves. On-premise, we have that. The difficulty with that is there's a huge setup cost to be able to put that in place. It needs a lot of resources to be able to get the system in, the integration done, and you need to also train up your internal staff to stay on top of the application, do all the infrastructure work that we talked about earlier, rather than anything else. Or you have a packaged SaaS solution, of which we have as well, which generally, we talked about LinkedIn, Facebook. It's aimed at that sort of marketplace, the volume commodity type marketplace where it's very simple. Everyone pretty much gets the same type of capability, very simplified, and off you go. There's not a lot of volume going through it. Usually aimed at the bottom end of the marketplace in terms of small to to small, medium-sized organizations rather than anything else. And obviously, the on-premise can have a huge amount of customization capability with it, but a packaged solution, well, you'll be lucky if you get much in reality. So they're pretty much what your options are out in the marketplace, or traditionally have been out in the marketplace more than anything else. We brought out a new product which is called Streamline for Invoices. It's really a hybrid between the two types of capabilities that are out there. It's still cloud-based capability, but instead of it being a SaaS-based, it is a multi-tenanted type capability. It also has private hosting capability for your own data so that it's completely segregated, but it has a lot of the processes, especially around workflows, built into it already. That means that it deals with a lot of things. Let's take the 80-20 rule, 80% of the stuff out the box already. The key thing about it is the automation aspects. You don't have to look after that. We know our product. We know what the automation rate should be. We look after that for you. That means that we set it up, we run with it, we optimize it on a regular basis so that you get the highest rates possible. And we're getting in excess of 80-85% reading rates or extraction rates out of the invoices coming through to be able to provide that for all the clients across the board. As part of that, it has the analytics built into it as standard so that you don't have to worry about the data. You've got access to all of that, and therefore it's just there for drill down. So let's look at some of the automation rates that we're talking about. Now, this is about where a large proportion of paper-based invoices that have come in, and you're looking to be able to capture that invoice and then do something with the extraction aspects to it. And the proportion of capability out of that can vary depending on what sort of system you've got in place. And we're going to look at part of this around a report that Bilitas has created. So what we're seeing here is that way back in 2000, down on the bottom left-hand side of the screen, EDI really, was starting to, or wasn't really doing very much. But over time, it's taken off. Okay, and that's been done because it's a very structured format that you get with it. What we're also seeing here, what's happened over time, is PDF images have taken off massively, had a huge, widespread take-up of this due to its ease, due to ERP systems being able to automatically push them out, regulatory changes, all that sort of stuff. And that's reached a huge peak within the marketplace. Now there is a new type of format which is coming out around that as well. So just to summarize the view of this, a good half of the invoices that are coming in paper format are now dropping, and the rest are coming in some sort of electronic version rather than anything else. And that's going to change over time moving forward as well. But if we look at the extraction capability, going back to what we were talking about previously, and on the left-hand side of the screen, we're talking about how do we extract and how good is that against how easy is that to use? Well, if you're manual, we've already talked about some of the rates around this, it tends to be quite low. And it takes quite a long amount of time to be able to get things out. Then we're talking about there's essentially the either on-premise or SaaS-based solutions that are out there. Now, on-premise has traditionally got quite good extraction rates out in the marketplace. And that's because of the type of controls that have been able to be put in place. And that's made it it's made it simpler to use and easier to use rather than anything else. The cloud side of things, well, it has less customization capability to your specific invoices in your specific suppliers, therefore it's not as good, or it traditionally hasn't been as good. Well, we've come out with the new solution, which is part of Streamline, called CAS, Capture as a Service. And that's where we're looking after that on a multi-tenanted capability for organizations so that we can get the best extraction rates out of that. And that has been tremendously high and has worked really well for organizations. So we're going to look at that in a little bit more detail, because this is where robotics really does come into this. And then on the back end of the capture piece, we then start talking about the AI aspects of what can you do with this data. So the key part of this, as far as you're concerned as a customer, you don't have to worry about any of this. We manage this. It does real-time reading up in the cloud. We do it on Microsoft Azure, so it's their infrastructure that we back it off to, because they're the experts in that. But we look after our application, and you can see some of the results that we're getting here. Now, when I took this slide, we can see we're getting extraction rates of 92% of straight-through processing for these vendors. So this is really high in comparison to what's out there, on the marketplace. We're also able to do this because we also have a supplier database which we've mutualized, and are able to use it to augment your suppliers against. So this is giving you, more importantly, great reading rates, or the best reading rates, and you're not having to do anything for that. So how does that help you guys? Well, what we're going to look at now is we're going to look at PolyOne, and we're going to have a look at how they are using the technology that has some robotics in it and some artificial intelligence capability in that as well. And then we'll wrap up. So, PolyOne, they are a large multinational manufacturer. They have SAP at their back end that they use for their system. They do all their procurement through Ariba. They have a number of different operations and manufacturing sites across Europe, North America, and out into the Far East as well. The processing, it's actually a little bit more than 90,000, but let's say, for sake of argument, 90,000 invoices a year into that. And they have a continual rollout of new sites that they're looking at. So what have they been able to achieve from that? Well, one of the first things that they actually did was to put in place a single ERP application. So where they had multiple versions of both SAP and Ariba, they brought that down to one. And they then use one version of our software globally across the organization. And because we are web-based, it makes no difference to their organizations. We actually have it installed in the US on the data centers over there. And they have a thick client for scanning invoices, paper invoices, in each of their country operations, which gets scanned straight into the central system and is then processed in the US. On that basis, we're then able to pull out, which SAP entity that they are talking about, to be able to match the invoice to the Ariba system and pull out the order information. And really what that's done for them is, as they bring on new countries that they've got, and especially as they move more to the Far East, this has made it simpler, more standard, faster for them to be able to bring on more of their companies and give them visibility for all their invoices across the life cycle of an invoice. So a complete audit trail from when did we receive it, have we received it, right through to, yes, we've paid it, we've paid this amount of money to you. You can see that through Supplier Portal. It's hugely reduced their costs. It's hugely reduced the amount of time that it takes for suppliers to get paid. And more importantly, they're paying the vast majority of their suppliers on time if they're not already at a point where they're ready to pay them early. I'm aware of time, so I'm just rushing through this slide slightly faster than I normally would do. As I said, please put any questions in through the chat log so that we can deal with that. One of the other key things that they were able to do, just bringing some of the robotics into this, or some of the artificial intelligence in, and the analytics, is the robotics has meant that they do not need to have anyone inputting an invoice into the system. Our software does that for them out the box. So, it will either stop with an AP clerk to be able to go, can you validate this piece of information? Or there's not enough information on the invoice because it's just incorrect. Or it's in the system and picking up the POs and pushing it out into the business. So that means that they've got a standardized capture piece, they have a standardized exception piece, an standardized extraction piece, which the auditors love because they can see exactly what's happened with that, who it's going to, what the business rules are that are applied to it. And this just means that from their point of view, they have a huge level of confidence that the software is consistently, regularly doing exactly what they want as they move through and go forward. So we'll move to, and I've seen what the time is, so I do apologise that this has gone on 10 minutes later than we anticipated. So what I'm going to do at this stage, I can see that we've had a huge number of questions that have come in. Thank you very much for the questions that you have put in. At this stage, I'm going to suggest that I will let the team deal with these questions after the event, mainly because I have overrun on the timings for this. So thank you very much for your time. Enjoy the rest of the day, and please let us know if there's anything that we can help you with.